Introducing our new series, Market Maestros, an exclusive interview series brought to you by Arthasachi Venture, where we dwell into the minds of industrial titans, thought leaders, and experts who have left an incredible mark on the financial and IT landscape. In Market Maestros, we aim to unravel the secret of success, explore unique insight, and gain a deeper understanding of ever evolving financial and IT markets, along with changing landscape. Our conversation will not only provide a glimpse into the professional journey of our esteemed guests, but also offer an invaluable wisdom and perspective for both seasoned investor and aspiring market enthusiast. Today, I am thrilled to kick off this enlightening journey with a distinguished guest, Mr. Narayanan, a true luminary in the world of commodities market, an individual whose expertise in the commodity market had shaped industry trends and inspired many. As the founder of Arthasachi Venture, we believe it is critical to bring out this conversation to empower your financial decisions and foster a deeper connect with the dynamic world of investment. So pack your bag and get ready for a captivating exploration of commodities market as we embark on the enlightening series with one of the most respected name in the industry. So join us in discovering the story behind the success, the challenges faced, and the invaluable lesson learned in the pursuit of excellence. Market Maestro is a place where wisdom meets wealth and expertise transform into insight. Good morning everyone. This is Ashish from Arthasachi Venture. As we embark on part 2 of our interview, let's begin by revisiting the key insight from our previous discussion with Ram in part 1. We dwelled deeper into the dynamic landscape and the complexity of the commodities market, discussing strategies to navigate the challenges. As the global spotlight is currently on India and China as a major contributor of economic growth, Ram shed light on how India and China influence the steel and oil market. We journey into the aluminum industry, the factor fueling current volatility. We turn our attention to understand how resilient is the supply chain in the oil industry, shedding light on measures taken to enhance stability. In the final section, Ram shared guidance to the investor who invested in Indian public sector company, whether they should hold on to their investment or they should book profits. Let's shift our attention back to part 2 of our interview. We started our discussion by focusing on commodities exchange in India, which is still in the early stages as compared to more developed market like US, UK and Singapore. Ram dispenses his insight on how he foresees their evolution over the next decade, promising a glimpse into the future of this burgeoning market. In the face of global warming and escalating environmental challenges, sustainability has taken center stage. We explore how the steel industry, a major player in the commodities arena, is adapting to this pressing environmental concern. As we shift gear Our focus sharpens on future outlook and predictions, covering key commodities like oil, steel, copper, and aluminium. Ram unravel the trends and factors shaping the trajectory of this market, providing valuable insight for investor and enthusiast alike. So whether you are a seasoned player or a newcomer, this section holds critical information for navigating the complexity of the commodities landscape. In the last section, it is a must-watch portion for the aspiring young professionals eager to carve a successful path in the commodity space. Drawing from his rich experience as a seasoned leader and a veteran in the commodities market, Ram shares guidance and valuable nuggets of wisdom. So join us as we conclude this enlightening session with Ram, offering a roadmap for success in ever-evolving world of commodities. Introducing Ram, before we embark on our interview, let's unravel the essence of our distinguished guest through this video.
Ram Narayanan boasts a rich 25-year career in the metals and chemicals industries, currently serving as the Director VP of Strategic Market and Business Development at Vedanta. With dual master's degrees from the London Business School and SP Jain Institute of Management, Mumbai, and a background in chemical engineering from LIT, Nagpur, Ram has excelled globally, managed operations in India, China, Taiwan, and Malaysia. His expertise spans metals and petrochemicals, international trading, and chief marketing roles, with a keen focus on crafting and implementing short-term and long-term business strategies and driving operational business performance. Beyond his professional achievements, Ram is an avid marathon runner, mountain trekker, and an avid blogger. Ram's journey began with Reliance Industries, where he delved into petrochemicals. A pivotal juncture in Ram's career unfolded when he embraced an opportunity to work in China, the epicenter of global commodity trade. Over the past 2 decades, this experience, coupled with extensive travel, has metamorphosed Ram into an international trade expert, providing him with comprehensive exposure to commodities trading, financing, and shipping. Today, Ram stands as one of the most sought-after professionals, effortlessly harmonizing profound industry expertise with a global perspective.
India has maintained its position as the fastest growing economy among the global market in the recent years. However, the commodities exchange in India are still in the early stage compared to more established market in the US and the UK, both for the dealers and the retail players. How do you foresee the evolution of commodities market in India over the next decade, and what potential implication might this hold good for the businesses and investor?
Well, India is one of the fastest growing markets globally, as everybody knows, growing at around 6.5 to 7%. One of the major factors for this has been the focus on building up the infrastructure in India. Apart from the services sector, which is a fast growing industry, which has been driving the GDP growth in India, the focus on infrastructure segment, especially the government of India, has been one of the major drivers for the increase in GDP in India, and is going to be seen in the future also. And now a focus on infrastructure, like various infrastructure projects like airports, highways, the high-speed bullet trains, and let's say the bridges at various dangerous locations like in Kashmir and Northeast. They are a focus of this present government. So therefore, when you have a focus on infrastructure, the demand for commodities is bound to increase, especially for steel, aluminium, zinc, etc. Now one would remember 20 years back when China embarked on its growth path by focusing heavily on hard infra, the same kind of thing happened in China also, where we saw a huge demand growth for all this kind of base materials. So similar thing is going to happen in India. So over the last 1 to 2 years, we've seen double-digit growth in all the major commodities, like let's take aluminium, zinc, even some of the basic chemicals like polypropylene, polyethylene and all. So therefore, India is one of the critical markets for commodities demand across the world. And given the way the future GDP growth is foreseen by the various agencies like IMF, World Bank, and by the Indian government, it is the demand growth for commodities going to be sustainable over the next few years. So, in fact, it is seen that in oil markets, India is the second largest importer of oil after China, and with China demand growth showing some signs of flattening right now, it is the Indian demand growth that is going to drive the dynamics of the global oil trade. So, such is the importance of India in the global commodity space. And India's demand growth, I think, unless until there is some black swan event, I think it's only going to go up and up and up. So what has happened during this period also is there is a lot of major commodity players have sprung up in India over the last 20-25 years who have become not only big players within India but also have become big international players. Let's take Tata's, let's take Jindal's, let's take Vedanta Group, Reliance has always been there. And so therefore like quite a lot of commodity players have come up. Now these commodity players have got heavy exposure to the international markets both on the supply chain front as well as on the markets front. So therefore they are exposed to volatilities in the global markets. So as I said earlier, having a good hedging mechanism is one of the ways by which any player can take care of the volatilities in the market. Globally, we have seen like players have benefited because of the various options offered in various exchanges like London Metal Exchange, Shanghai Futures Exchange, COMEX, and field of chemicals and SGX and all. SGX, Dalian Commodity Exchange and all. So therefore, like if you want to build up a commodity base and grow, it's imperative to have a good paper trading platform also. In India, we have exchanges like MCX, which has come up over the past many years, and also Indian Gas Exchange, which is a gas futures exchange also. While many players have started playing in this particular market and the pricing in these exchanges have started reflecting the global markets, one of the things that needs to happen to have a much more robust futures exchange is to increase the liquidity in these markets. Now all the authorities are trying to increase more participation in these particular markets. So therefore I'm sure in the days to come we will see more participation and more liquidity in these exchanges so that wider participation can be seen. And that is the first point. The second point is a local commodity exchange is very, very important, especially when you want to grow the MSMEs as well as SMEs, because many of these people might not have the management bandwidth as well as the financial muscle power to go and play in the international exchanges. So if you have a local exchange which perfectly mirrors the international markets, all these players will come and participate in these markets, and so therefore you'll have wider participation in the exchanges and hence greater liquidity. So therefore I'm sure this is bound to happen in India in the years to come. And one last point which I want to leave behind is like one of the major reasons why liquidity increased in China has been the retail participation. Retail investors, like especially housewares and all, who play in this particular kind of markets. Now in India we've seen, especially in stock markets, retail investment has been very, very robust. But I'm sure like in the commodity space also, once these exchanges offer more facilities, we'll have a wider retail participation also, which in turn will increase the liquidity in these markets. So hence to summarize, I'm very confident that these exchanges will develop in India and offer wider options, and the development of these exchanges will enhance the competitiveness as well as grow the commodities business base in India.
In the recent year, with the rise of global warming, environmental challenges, sustainability has become a central focus. How is the steel industry adapting to this environmental concern, and what role does it play in shaping market dynamics?
Well, steel market is one of the biggest markets across the world and is very, very critical, especially from a political point of view, because it is the commodity that is needed in big numbers in development of infrastructure, construction, etc. So steel industry is very, very critical for any business. Now steel industry accounts for about 10% of the global greenhouse gas emissions. So therefore it's one of the industries which has been brought under the ambit of carbon border adjustment mechanism of Europe, where post 2026 any supplies which is beyond a particular limit of carbon footprint will necessarily incur a carbon tax. So now steel industry so far has been traditionally in a blast furnace route, which uses coking coal, as one of the raw material, and therefore the carbon footprint is high. Now, to just give a bit of numbers, the existing blast furnace route has a carbon footprint of something like 3.5 to 4.5 tons of carbon per ton of steel, which is on the higher side. Now, globally, two things have happened in the steel industry because of the pressures from the decarbonization groups. The first is the industry has started moving towards electric arc furnace route, in which quite a bit of scrap is used. Now, if you look at it globally, about 30% to 35% of the global steel production has now moved electric arc furnace route, especially in Europe. In fact, many people would have read that Tata Steel has also got some incentives from the UK government to convert its steel facility in UK to EAF method. So that is the focus on decarbonization. So therefore, moving towards electric arc furnace method is one of the ways the industry is moving towards a lower carbon footprint. That is point number one. Second, because this one of the major points in this is players are trying to use more of renewable energy as well as use scrap to reduce its carbon footprint. Now, to just give you a sort of a flavor of the carbon footprint using this method, the carbon footprint of EAF method using scrap can be as low as 0.5 to 1 metric tons of carbon per ton of steel. So that is the kind of focus that has come on EAF business. Of course, conversion to EAF business is not easy from a blast furnace route, so that's why good amount of capital expenditures is required. That's why many of the steel players, especially in Europe, are looking up to the local governments, like what Tata's did with the UK government, for subsidies to do this transition. Another method, apart from renewable energy, which the steel producers are trying to do is move towards hydrogen as a source of energy. Now, hydrogen as a source of energy is coming up in a big way, and with the costs for electrolyzers as well as electrolyzers falling, I'm sure the cost of hydrogen also fall down so as to make the so as to make the steel manufacturing process very, very competitive using hydrogen. So essentially, what the steel industry is trying to do so as to go on the path of sustainability is move towards to the electric arc furnace method using scrap, and second thing is try to change the source of energy from present coal-based sources to hydrogen, renewable, natural gas to reduce its carbon footprint. So that's the way the path of decarbonization sustainability is happening in the steel business across the world.
Throughout our conversation, we have thoroughly dwelled into production capacity, demand and supply scenarios, as well as supply chain situation for major specific commodities. Now, let's shift our focus to the pivotal theme of our discussion, one that holds paramount significance for our viewers, the future outlook and predictions. Looking ahead, what is your outlook for oil, steel, copper and aluminum market? Do you have any significant prediction for the coming month and this year?
The key factors that affect the prices for, let's say, commodities like oil, aluminum, copper and similar commodities is mainly the global economic growth, especially in key consuming countries like China, India and all, supply chain dynamics and effects of any geopolitical events. And now let me just touch upon the global economic growth. Now, World Bank has predicted that the global GDP growth for 2024 in the range of 2.4-2.3%, which might see a slight downside, mainly because recently with the sort of escalation of the Israel-Hamas conflict as well as the Red Sea crisis, so which has sort of put a spanner in the works. So therefore, we might see a slight dip, maybe close to 2% of the economic growth. Now, inflation is, even though people say that the worst part is behind us, now inflation is still it's still rearing its ugly head. Like December numbers of USA still showed a high inflation of 3.4% as compared to 3.1%. So that means inflation is still pretty strong out here. Now, US GDP growth rate is expected pretty flat and pretty weak in 2024 to around 0.7-0.8% as compared to more than 2% last year. Now, the second major economy, China. China is also expected pretty weak, especially given the weakness of the property sector, and given the fact that property infrastructure, the government has not announced any major stimulus as they used to do in the past. Recently, there's been RRR cut of 0.5%, and then efforts to boost the equity markets. But there's no major stimulus that is expected this year from Chinese government, which can really push up the GDP growth to, let's say, beyond 5.5 to 6%. I think China will have to live with a GDP growth of around 4 to 4.5%. That is number 3. Now, Eurozone has also got very, very weak signs. Germany, we saw last year slipped into recession, and inflation is still pretty high in UK. Now, I think the only country, one of the few countries which is showing, which has been a bright spot is India, which is expected to grow around 6.5 to 7%. So, net is, if you look at on a global scale, the outlook for 2024 is expected to be slightly bearish, which will have a reflection on the demand side dynamics, which will affect the prices. So, therefore, oil market, as I explained earlier, will see some amount of bearishness because of slowdown in Chinese demand, but there are also supply chain risks out here. So therefore, net is we will see a slightly muted oil demand growth next year. That is next year in 2024. And similar thing is for aluminium also. Given the sort of weak economic growth outlook and given the fact that at the present pricing all the smelters are making money, so therefore the market is expected to be flat to slightly bearish. So that's the way I look at the aluminium markets. Now coming to copper. Now copper has got a slightly more interesting scenario. Copper has got a huge demand growth coming in from the green energy and transition sector. And also copper supply is restricted mainly because of restrictions in copper concentrate availability. So that's why copper is expected to see a slightly more firmer market dynamics. In fact, from an investment perspective, copper is seen as one of the bright spots for the investor community. Now, copper in the year 2024 is expected, copper demand is going to grow by 2.5%, while production is expected to grow only by 1.3%. So that shows that the supply demand gap is increasing. And number 2, and copper has got a huge demand growth, as I said, coming from the green energy sector, which has been driven mainly by China. So the cost of therefore it is estimated as against the 2.5% copper demand growth, about 8, the copper green energy sector will grow by around something like 15 to 16%, which is a huge demand growth. So therefore that is the strong demand which we see from copper. So if you look at the outlook for 2024, I would say a sort of a muted outlook for oil and aluminium, but a pretty strong outlook for copper.
Copper production capacity include plan expansion in the coming year in a similar manner as you covered for oil and steel. How do you see it with the demand scenario for the future?
Well, here's my answer. Copper production capacity growth has been constrained over the last 2 years. Last few years, mainly because of constraints in concentrate availability, especially the mining projects. Now, recently, in the last 2 to 3 months, the tightness in the concentrate availability has been reflected in the prices of the copper treatment charges and refining charges, which has dropped to somewhere close to $45 per ton as compared to around more than $80 per ton about a year back. Also, a reflection of this issue is seen in the planned capacity expansion that has been announced over the last 5 years. In 2018, it was 1.4 million tons per annum of copper expansion plant. 2019 dropped to 0.6, to 20 to 0.3, 21 1.1, 22 0.8 and 23.16. As you would see, there has been a steady decline in the number of copper mining projects that's been announced, which is an indication of the tightness of concentrate availability and the difficulty in obtaining the mining projects. So therefore, if you look at the supply demand outlook for copper, it is naturally tighter. In 2024, copper had a production, is expected to have production of close to 26 million tons and a demand of 26.4 million tons. Net shortage of around, let's say, close to 500,000 tons. And similar thing is expected to run in 2025 also. So between 2025 and 2022, copper production growth is expected to grow only by 2.4-2.5%, while demand is expected to grow by 3.2-3.3%, which will naturally increase the gap between the supply and demand. So therefore, net is a constraint in copper supply is what is going to play in the market. Plus a good demand growth coming especially from the green energy transition and green energy segment is expected to keep the demand strong. So net is supply is going to remain tight.
Furthermore, your exemplary coverage on forecasting deserves commendation. In this vein, it would be enlightening to drill deep into your prediction regarding the anticipatory price trajectory for aluminum, copper and steel. Specifically, an elucidation of your vision for the year 2024 and foreseeable future would be highly beneficial for our investor seeking to navigate the complex dynamic of these pivotal markets.
Okay, here's my outlook. As I said earlier, given the sort of bearish economic outlook, supply chain dynamics, China being a little bit weak, good growth from India, USA is still a bit weak, and UK also going through pangs of inflation. So therefore, net is the outlook is a little bit bearish for many of the commodities, bearish to flattish, I would say. So therefore, my outlook for prices is, let's say, oil, aluminium will be a little bit flattish to bearish compared to present levels, and copper has got a good upside because of the supply constraints. So probably we might see oil. My expectation is oil probably in the same range between $75 to $90 per barrel. Aluminium, let's say between 2,000 2,200. Copper might cross 9,000. So that's why I said from an investment perspective, copper is a better, might be a better bet for the investors. That is number one. And beyond 2024, again, it depends upon the way the economy improves and way the Chinese outlook improves. And so therefore, very difficult to predict right now what is going to happen in 2024. But structurally, if you look at it, I think a little bit tightness in the supply of copper and a good demand growth from the green energy sector still makes copper a pretty attractive bet to be in as compared to any other commodities. That's what I would say.
As a seasoned leader and veteran in the commodities market, what guidance would you offer to the aspiring young professional seeking success in this field? Share your insight based on your journey.
Okay, now when I speak to different youngsters and when I speak at B schools and various youngsters, like today everybody wants to go in the field of technology, artificial intelligence, machine learning, so virtual reality and all this kind of things. So that's what they're looking at. What I counsel them is okay, these sectors are faster growing sectors, so therefore there's a good demand of professionals out here, but they will also need the support of the basic industry source to support these kind of industries. For example, the green energy demand, we need good amount of copper, aluminium, lithium, cobalt, and all sorts to support these kind of industries. And then these industries are not very boring industries, I would say. Like any other industry, they also have a wide global footprint. Today we have production of all these different kinds of materials and ores across the world. Let's take USA, South America, North America, China, India, Asia. So therefore, this business is also a global business like any other business. And also this business also is not only predominantly trading. Trading also means dealing with various kinds of different aspects like banking, finance, logistics. So therefore, you get exposed to wide variety of different fields. The third point is that technology plays a big role in this business. Now, I have personally built up e-commerce modules in the commodities trading business. And second thing is many of the back-end support actors like documentation, banking channels have been automated. So therefore, it's not that it's a completely manual operation. And even the mining sector production, a lot of production has been automated. Google Maps is being used extensively. Google Spatials is being used extensively in mining sector. Virtual reality is being used in a big way in mining sector. and data analytics, and then everything is being used in a big way. So therefore, automation has also come to business in a big way, because of which efficiency has been increased, effectiveness has been increased. So therefore, there's also pretty exciting field which has got a confluence of global footprint, technology, and then exposure to various different functions, and of course, and this business is also profitable, and it also gets good amount of valuations, because we see a huge amount of mergers and acquisitions going across the world. It also gets good amount of valuations, and so therefore, what my advice to young professionals would be look up this sector also. It's an exciting field to be in, and this sector is not going to go away, and this sector is going to be a very critical role in the new age technologies like AI, machine learning, and all, energy transition, electric vehicles, and all. So therefore, this is a pretty exciting field to work in.
Ram, we appreciate your valuable insight and wealth of knowledge you have shared today. Your seasoned perspective in the commodities market is undoubtedly enlightening for our viewers. Thank you for taking the time to join us. We look forward to future opportunity to host session with leaders like yourself and continuing to offer valuable insight to our audience. Thank you once again for your time and expertise. Thank you so much for tuning in to our inaugural interview series, Market Maestros. We greatly appreciate your support and engagement for an enlightening journey through the intricate landscape of commodities, where wisdom meets opportunity. Through this conversation, we have drilled into the secret of their success, gaining unique perspective that often go unnoticed. Our discussions have provided a deeper understanding of how the future is shaping up in this space. As we conclude this series, we are excited about the prospect of bringing you a more compelling interviews with new guests exploring diverse area of expertise. We look forward to your continued presence on this enlightening exploration of knowledge. Stay tuned for upcoming episodes as we continue our quest to unravel the stories and wisdom of remarkable individuals. Until then, thank you for being a part of our vibrant community. We eagerly anticipate reconnecting with you soon with fresh perspective and inspiring guests. Thank you.